Welcome, guys. Nina, what does this mean for the overall software as a service space? What kind of demand insights did we get? Because in a way, it seemed reminiscent of what Frank Slootman told us on Tech Check last week, that it's not so much a macro issue, it's individual customers that we're seeing some rockiness.
Well, thanks so much for having me. It's great to be back. And as an investor in SaaS in the private market, seeing Salesforce's earnings yesterday was a great sign because, as you said, it is a barometer for cloud spending. And I think across the board, we've really hit the reset button on SaaS from a valuation standpoint and also the metrics that matter. But as Salesforce shows us, this is not a doomsday scenario. You know, stock performance only tells you a certain part of the story, but not the whole story. And I think if you take a step back, what you have to look at is, are these companies selling mission critical software? And who are the end customers they're selling into? And what is the financial health of those end customers?
Okay, so Kirk, what are we seeing in enterprise tech spending writ large, not just what's reflected in these earnings? And how does that reflect companies who are also in this ecosystem?
Echo Nina's comments on spending these days on the enterprise side. It's very durable. I think it's very difficult for large enterprises just to turn off and on spending as it relates to their digital strategies. And we published a report over the weekend talking about IT spending, and 93% of the respondents who are at larger organizations are expecting to spend more on IT. It's a continuum of spend. So I think the idea that IT spending is as cyclical today as it was in prior cycles is just wrong. And I think you hear that from companies like Salesforce, from ServiceNow, from Snowflake, that the products that they're delivering to their customers are mission critical in terms of their customers' ability to compete in the digital economy. And so, I think obviously IT spending is not completely disassociated with the macro. If things get tougher, you'll see some pockets of weakness perhaps. But in general, IT spending is holding up extremely well.
I get the optimism, guys, and, even hearing Benioff say that they've been on this world tour to talk to hundreds and hundreds of customers. But do investors want to be a little careful on the read through here? I mean, this is Salesforce. It is kind of a gold standard. They've got so much in free cash flow. Benioff also talked about how they learned some really hard lessons during the 2001 dot-com bubble when it burst. So, like Nina, we want to be careful about applying what Salesforce showed us to some of the younger, newer SaaS companies.
Of course, I think that's a great point. And I think on the private side today, the conversation is very different if you're an early stage company or a growth stage company. Early stage company, valuations haven't changed that much, nor has the strategy, frankly, because the checks that we're writing today, these multiples and how these companies are going to be valued 7 to 10 years from now is something we can't predict. But if you're a growth stage company, I do think we have reoriented around, net dollar retention, CAC payback, and unit economics. And what's so great about the SaaS model is the agility to go more towards profitability or more towards growth. And I think there's some amazing examples in the public markets of companies doing this really well, like Datadog, for example, Zoom Info, and Atlassian, which have been able to toggle both free cash flow margin, high margins, and high growth all at the same time.